thus far in 2014, it's been a reasonably challenging year for our style of investment, the sustainable future funds. And I think there's a few reasons for this. And I guess the best way of characterizing it is that investors in the market generally are underpaying, or they're undervaluing future growth prospects. So we've seen the type of company that we invest in, which generally have growth prospects further out, so falling in value really in the market relative to companies which are delivering, if you like, earnings tomorrow, more certain earnings tomorrow. So we've seen, in the market generally quite strong performance from the likes of mining, utilities, oil companies, tobacco companies. And as you'll recognize, these are all sectors where we either don't invest at all or we're underweight. So, short term, it's been a pretty difficult market. However, we haven't changed our strategy. And we continue to believe that companies which are going to generate long-term growth in earnings will be rewarded. And it's for that reason that when you look back at our longer-term performance, so over 3 years, the majority of our funds are first or second quartile versus their mainstream peers, that this is borne out. So it's a short-term challenge, but longer term, we're still very confident in the type of companies we invest. So if I talk about a couple of three companies which we have invested in over the period, either increasing our holdings or adding as new holdings. And these characterize really the sort of companies that are in the funds. And the first is a US company called PerkinElmer, a slightly curious name, but really what they do is diagnostics. So when your baby is born in the US, take a bit of blood and it gets sent off and tested by PerkinElmer for various different conditions, up to over a dozen conditions. In the US and Europe, in Europe and the UK, you're probably going to be tested for half a dozen conditions. And in developing markets such as China, there's probably only one or two conditions. So we feel there's great growth for this company, which really provides us with people with diagnostic sort of results to determine the health of their child for one. So we think there's a lot of growth to come from that company. The second company is also healthcare, and this company called BTG. This is a new holding for the funds. It's a specialist pharmaceutical company, and it has a really strong portfolio at the moment, which ranges from anti-venom for snake bite to treatment for varicose veins, as well as treatments for prostate cancer. And it also has a very strong pipeline of drugs as well, which we think are there, and it fits very much within our quality of life theme. The third company is slightly different. It's an education company in Brazil called Croton Education. It's one of the features of developing markets that education is very, very highly valued. And Croton provides high quality education in both primary, secondary, and sort of specialist professional qualifications. And we see great growth from that company, which we hope will be unaffected by the World Cup football going on there. But those are three companies which I think give an indication of the sort of long-term growth we are trying to invest in our funds, and that we believe will see put the funds in good stead for the future. I guess the biggest thing that has happened in sustainability has happened very quietly, and it's been the announcement from the Obama administration that they are going to mandate the Environmental Protection Agency to control carbon dioxide. This is something that the US has resisted doing ever since the climate change or the Rio Convention in 1992. It's a massive change, and they're targeting a reduction of US power generation carbon emissions of 30% by 2030, which actually now puts the US in the camp of one of the most aggressive, if it all gets passed, one of the most aggressive decarbonizers of any economy, and puts a totally different picture on the climate change talks which are going to be happening later this year. So huge support for the idea behind our climate change theme that decarbonisation is a trend that's going to carry on for many, many years. And it underpins really our investments in companies involved in LED lighting, energy efficiency, as well as renewable energy. So a massive change and a real positive underpinning for one of our themes. One very positive aspect is that we've seen strong growth in funds under management over the more than 13 years that we've been running the funds. So we launched them in 2001, really with nothing in them, and they've grown now to be 1.6 billion. Back in 2008, it was 900 million of assets under management. So you can see steady long-term growth, and that's continued through this year. We have really sort of ambitious targets for growth as we let people know that there is an option to invest in funds where the money is going into companies which are more sustainable, helping to improve quality of life and reduce environmental impacts, and that these funds deliver decent investment returns.